Do you think the market is pricing in 4% GDP growth, 3%? Or does GDP growth, Patrick, not even matter because the metrics are so far past the way we have to look at coming out of this pandemic and widespread lockdowns?
Well, GDP is ultimately what we care about. I think the unfortunate reality with GDP is it's just reported infrequently. And I think when you look at areas like inflation expectations and interest rates, both of which have been rising, high yield spreads is another one which are really low. All of those really point to continued economic strength. And that's why we're seeing days where, for instance, the 10-year yield is going up by a few basis points to 5 basis points in any given day. And why we've seen so much recent rise in interest rates is because they're really responding to the backdrop, which is improving. And GDP will ultimately show that. When you look at consensus estimates, for the full year, real GDP estimates are around 5%. That is a tremendous number, particularly in the context of what we've seen over the past 30 years. So we don't want to take away from that, but look at the real-time indicators, the interest rates, the price of commodities, all of which point to very, very strong backdrop for commodities and for rates and the economy.
Yeah, and commodities look like, as some have said, that they might be in the beginning of a super cycle. Certainly, they have been extremely strong to begin the year. Is there any market, leave us with some opportunity, Patrick, is there any market that you and your colleagues at Credit Suisse see as still being undervalued, fairly valued, just a good bargain for our viewers' dollars at this 10 in the morning it is on a Monday?
Well, right now, your economically sensitive groups are absolutely the way to play this. Financials within that is one of our favorite. They remain incredibly cheap relative to the market and relative to where they have been historically. Interest rates are going to continue to move up, and they are a direct beneficiary of that. And on top of that, with credit risk so low right now, the reserves look quite strong. So financials is an area we would be particularly focused on. But anything economically sensitive is going to do well here.
Shepard Smith here. Thanks for watching CNBC on YouTube.